came from whatever into the real estate space, and then how you got into, you know, the
Okay,
storage units.
awesome.
Yeah.
Just give me 1 second, guys.
Look forward to
Lights,
meeting you in
camera,
person.
action. Let's go. We're live, guys.
Hey, everybody. Welcome back to another edition of Small Market Sessions. Just remember, this is not legal or financial advice. So today we got a really, really special guest. We bring you all types of real estate from all different sectors. And today we have Alex Pardo with us. He's a self-storage investor, entrepreneur, and coach who helps real estate investors break into the storage asset class. He started his career in traditional real estate, completing over 750 wholesale and flip transactions before transitioning into self-storage in 2020. Today, he owns and operates multiple storage facilities and is the founder of Storage Wins, a coaching platform that teaches investors how to acquire cash flowing storage deals, often using creative financing, little to none of their own money. He's also the host of Storage Wins podcast, where he shares strategies on building scalable, passive income through self storage investing. So, without further ado, Alex, can you just kind of give us your story and tell us how
Yeah.
we got going, how you got going into business, what you were doing before you got into the real estate business, and just take it from there?
Yeah, absolutely. Coach Travis, honored and grateful to be on here and just kind of sharing with your audience. So I'm looking forward to the conversation, some of the questions you guys are going to ask me. But yeah, look, I'll kind of give you the brief modified version so we can kind of get into the meat of what you guys want to know. But I came from pretty humble beginnings. I'm the first entrepreneur in my family. My parents were born and raised in Cuba. My sister and I were born in Miami, and I was always taught the typical middle class mentality of go to school, get good grades. And so that's what I did. Went off to college and graduated with a finance degree. And I started interviewing with big corporations like General Electric, Johnson and Johnson, and ended up taking a job with GE. And I realized 3 to 4 months into that role, as I looked at my boss and all the way up the ladder, all the way up to the CFO and CEO of the company, I'm like, I don't want this life. I don't want to be working for somebody. I was spending an average of 70 to 80 hours a week behind Excel and PowerPoint and in a cubicle. And I was just like, this is not for me. But I had a 2 year rotational program. So I finished that program, ended up quitting GE. And I said, hey, I'm going to go into business for myself. So I started to immerse myself in programs like Carlton Sheets No Money Down. Like literally, that was my introduction into real estate. And I went backpacking around Europe that same summer that I left General Electric, and it was a pivotal trip for me because when I was on the train going from city to city, country to country, I really started to expand my thinking, and it was books like Think and Grow Rich, Rich Dad Poor Dad, that really planted the seed that said, hey, when I move back home to Miami, I'm going to get into real estate. I knew that I wanted to build assets, but I didn't know what to do. And it's interesting that when you decide, my belief is that God starts to open up certain doors and opportunities for you. And it was less than a week later, I went into an internet cafe in Ibiza. A friend of mine had sent me an email inviting me to, back then they called them boot camps. It was a marketing for deals boot camp. This was in October of 2005, to give you an idea of how long I've been doing this. And it was $997. It may as well have been 100 grand to me because I had funded this backpacking trip on my credit card. I wasn't going back to a job. In fact, even worse, and this is somewhat embarrassing to admit, but it's part of my story. I was moving back in with my parents at 25 years old. Like, not a good look, right? That's not how I drew it up in my head. And so I had a lot of drive, the pain of not just going back home. I'm grateful that I had a roof to go under, but I'm 25 years old. I want to be off on my own, obviously. I'm a grown man at that point. I certainly didn't want to go get a job. The pain of that was driving me. So I put the 997 on my credit card. I went to this event. I got home. I plucked out a pre-foreclosure letter that came inside the manual. I went off to Kinko's at the time, which is a place where you get photocopies. I literally put the pre-foreclosure letter and I made 300 and something copies. And I got to my parents' kitchen counter and I literally started stuffing envelopes and handwriting because I had bought a pre-foreclosure list. And I sent my first direct mail campaign. And so people started calling me who were in pre-foreclosure, and I felt like a complete imposter. I'm like, who am I? First of all, I've never owned a home. I just left a weekend boot camp. Who am I to help people that are further along in life and they fell on hard times and so they're behind on payments now? And I kind of just failed forward. I stumbled my way through the process. And a little bit less than 3 months after I started my journey, I ended up closing my first deal, which was a short sale. And between myself and a partner that I brought into that deal to help me because I didn't know what I was doing, we made 44,000 bucks. So that was my entry into real estate. I think we closed that deal January of 2006. And when I closed that first deal, the floodgates opened up. Like, I think I was so ignorant to the process of building a business that I said, well, if that worked the first time, it should work again. And so I just started sending out direct mail campaigns. I decided to go door knock the list that I was mailing. And that's how I got, I think, my first year in business. I did 12 or 13 deals, and they were all combination of wholesale and short sales.
All right, that's pretty good. I mean, has there ever been two greater books than Napoleon Hill's Think and Grow Rich and Rich Dad Poor Dad? I mean, that's converted more people and put more people in the real estate
Yeah.
business
Yeah.
than maybe anything out there.
Yeah.
Because I kind of came the same way through Rich Dad Poor Dad. I read the book and I was like, wow, man, that's
I wish,
crazy.
coach, that I had a more interesting book to share that nobody's heard of, but because you're right, I feel like everybody mentions and references those two
Yeah,
books. But again, that those were the books that got me started. It just expanded my thinking.
right, right.
Me
Yeah,
too, guys. Me too. Funny enough, right?
yeah.
Yep.
Well, you never thought of real estate and assets and liabilities and how it worked, and then you start thinking, wow, that is right. I never thought about it that way. So, yeah, that's great stuff, Alex, and thank you for sharing it with us. Um, so we're going to ask if I'm going to ask you a few questions about the storage business, which I like storage business as well. I think it's a great business model, and it's a little different than what I've come from in life dealing with tenants and toilets.
Yeah.
You still have tenants, but it seems to be a better asset class as far as if people don't pay you or once a tenant leaves, you
Yeah.
got a dumpster on site, throw the stuff in the dumpster, blow it out with a blower, and you're back ready to rent again versus, maybe a $10,000 rehab after someone tears your property up. So that's uh, that's one thing that's definitely interesting about the business. But so what makes like the self-storage space, what makes it, you think, perform differently, like in differently from residential real estate during like downturns and stuff like that? What separates storage units versus, let's say, single
Yeah.
family houses?
It's a really good question, coach, and there's a lot of layers to that answer, but let me share with you just a few things that I discovered in years. Wholesaling, fix and flip, and then in 2018, I started building a rental portfolio because I felt and thought that that was going to be the best path to wealth and to passive income. And
Hey, hold,
I
hey, hold
quickly,
on, Alex. Alex, I think your microphone might have went out for a
It
second
came back
there.
on.
oh, I'm
Is it
sorry.
back?
Can you hear me?
Yeah. Now,
Okay,
yeah,
we're good. Okay.
Okay,
yep.
sorry about that. Yeah, I was just sharing, Travis, that after spending many years in residential, it was a great business because I was able to generate a lot of cash. But every single month, I started from zero. I oftentimes I would ride the income roller coaster. There were years where we were very fortunate to have multiple six-figure months in profit, and then the next month would be a goose egg, like zero, like no money generated, and it was this constant wave. And so I remember telling my wife, it's like let's go back to Rich Dad Poor Dad. We need to own assets. And so in 2017, 2018, I started buying rentals, and I thought that rentals were going to be passive or semi-passive. I thought that was going to be my path to building wealth and not just making a bunch of money. And I quickly realized I got to five rentals and I'm like, there's got to be a better way. Like, I don't want 30, 40, 50, 100 houses. It just, that felt like another job to me. That felt like more work, property management. And so I built this rental portfolio, small portfolio, five houses. And I was like, this is not the path for me. And I happened to be coaching somebody because I've been fortunate to coach real estate investors and entrepreneurs going back to 2012, 2013. And I was coaching a gentleman who owned a storage facility. And when you coach somebody, and you guys know this, but you get an inside look into the business, what's working, what's not working. And when I saw the asset class, my eyes just like expanded because it was everything I wanted. When I look at a business, I want a business that basically gives me time freedom and options. I want a business where I don't have to have a big team, I don't have to have employees. I can run it remotely. I have a low headache factor, high profit margin. And it was the exact opposite of what I had built in my wholesaling business, which had a bunch of moving parts. I had a big team, it was bloated. My overhead was, I don't know, 40, 45 grand a month. Going back to your question, one of the first things I discovered about self storage is that it's a very recession resistant asset class. And you can fact check me on this. Jump on AI, Google if you're still using that, and see what storage has done historically in the downturn. And I think one of the reasons is storage is a very sticky product. In other words, I don't know if any of you gentlemen rent storage or have a unit, but when you do, you tend to stay and pay month after month after month because think of the pain of disconnect. If the four of us that are here in the Zoom right now, or maybe the five with Lila, if we went and rented a unit, or each of us had our own units, and imagine we move all our stuff into a 10 by 20, think of what has to happen for you to move out of that unit and cancel that, right? It's a process. It's going to take a whole weekend. You're going to have to truck. You're going to have to bother people, a moving company. And then when you think about the monthly expense of storage, people pay anywhere between $50 and $350 a month. We're not talking about $3,000 a month in rent. Like 100, 200 bucks a month for a lot of people is not going to break them. So they just stay and pay. And then if you zoom out and you think about Americans, right? Depending on who you talk to, I think it's unfortunate, but Americans just tend to buy and consume crap that they don't need, right? I don't know about you guys, but like my wife, every time I get to the house, I have 4, 5, 6 Amazon packages at the door, and I'm like, babe, what is this? Like, what else did you buy? Like, we don't need this stuff. And I think everybody has probably experienced that. And when you think about when the economy is contracting and things aren't good, what do people do? They tend to downsize, but people are so attached to their stuff that instead of getting rid of it, selling it, or throwing it away, they go rent storage. And then when you think about the economy when it's booming, what do people do? People are spending, they're buying toys and things like that, and they go get storage. So I'm very optimistic, confident, and bullish on the asset class. I really think that it's a product that Americans need. And I think depending on the statistic, there's anywhere between 50 and 60,000 storage facilities in the United States, and 64% of those are run and operated by mom and pops, those are the owners that we go out to and reach out to about the possibility of buying their facility. So those are a few reasons, Coach, why storage I believe is a very recession resistant asset class.
Yeah, I mean, yeah, 100% agree. And I have storage units, I flip houses, so I've got materials stored and I've got,
Yeah.
and the cool thing I like about the storage business is I look back and I say, I've had this storage unit now for, you know, years, and I've paid, you know, maybe $6,000 over the last 5 years to store $500 worth of stuff.
Yeah.
This is great, man. I said, this is the greatest business ever, you know,
Yeah.
to be in the storage. But you're right. If I don't, I've got to do something with all that stuff. I've got boxes of ceramic tile and I've got this and, stuff left over from projects. And I don't want to put it in my garage. I don't want it in my house.
Yeah.
So I'll
Yeah.
gladly pay the storage fees and keep it over there and go there when I need something. And, you
And
know,
not just that, Coach, but let me ask you this. How often do you go to your unit?
not often.
So that's the point. There's not a whole lot of traffic. When we have rentals, when we have homes, people are living there. So things break and things need updating, things need maintenance. I mean, it's an asset that requires a lot of attention. Storage is also an asset, but we don't have nearly the traffic. There's no plumbing, there's no toilets, there's no kitchen. And so it's less work, quite honestly.
Mhm.
It's less work.
I mean, if I got flip projects going on, I may be there 2 to 3 times a month looking for maybe lights that I had left over from the last part,
Yeah.
But if I'm not real busy, I might not be there for 2, 3 months.
Yeah.
Just, so you're right. The traffic is low, very low.
Hmm.
So
Hmm.
yeah, that's great stuff, man. The storage, I just think the storage asset class is just fantastic. So I'm really pumped and And I was excited when Travis told me you were coming on. I'm like, oh
Yeah.
man, I got questions, man. I'm
Yeah. Fire them away, man. I'm here.
so what would you say as what are the biggest mistakes that new investors make when they're evaluating a storage facility? I mean, like you see it, somebody's got one for sale,
Yeah.
or every now and then we'll see a storage unit here in West Virginia up for auction
Mhm.
through like Joe Pyle auctions and stuff like that. So, you know, what what's the mistakes that newbies make when they evaluate? What do they not see?
Yeah. So let me zoom out first and let me share with you some common mistakes that people make. Not just I'm going to answer your question directly when it comes to evaluating something we call underwriting in the commercial real estate space. But big picture, let me share with you one of the common misconceptions that I think a lot of people have. Oftentimes, I talk to people who feel somewhat intimidated by the asset class. And it's so interesting how humans, I heard Tony Robbins say this one time, and it always stuck with me. Humans are meaning making machines. We see something, we have a thought, we make a meaning, or we tell ourselves a story about it, and then we believe it. And many times I talk to people that the stories they tell themselves drag them down, don't lift them up. What do I mean by that? Many people believe that they need to have a lot of money to be able to go buy a storage facility. It's common. I hear it all the time. Like, hey, Alex, I don't have any money, so I can't buy I can't buy a storage business. Or you mean to tell me you don't need to have hundreds of thousands of dollars? I've been involved in numerous storage deals, every single one of them. Literally 100% of the storage deals I've been a part of, I have yet to use any of my own money. They have all been structured through seller financing. One of them was small business administration, private lenders, equity partners. So if everybody listening and watching me can walk away with the belief that regardless of your financial situation, you can buy a storage facility. What it boils down to is it's a knowledge gap. It's understanding not only where to get the money, but how to structure the deal properly. And then number two, it's taking inventory of the thoughts and stories that you're telling yourself. Do you believe a lie that you need money to buy storage? Now, you do, it just doesn't have to be your money, right? OPM, other people's money, one of the reasons we love real estate. Now, to answer your question specifically about looking at deals, analyzing, the biggest mistake I see people make, and I fell into this trap, is confusion is the opposite of clarity. And when you don't have clarity and there's confusion, you get stuck, you get overwhelmed, and so you never take the first step forward. People look at an offering memorandum, which is basically a marketing packet that a broker puts together that has a bunch of numbers. And people get confused and they either look at it and get stuck and say, screw this, or they spend so much time on it that they're wasting time. So one of the things that I teach my coaching clients inside of our Storage Wins community is we have something called a 60-second yes no deal filter. And basically, with just a few numbers, you're able to determine in less than a minute if you should spend additional time. In other words, is this a storage facility where there's potential there? Does it deserve an additional 5 to 10 minutes of your time and energy to then see if it's something that you want to fully analyze to be able to make an offer on? So I think that's a common mistake is people just get confused, they get stuck, they spend too much time trying to analyze a deal only to then not move forward and do anything. And I think we have a simple 3-step process. Spend 60 seconds to determine if it makes sense to spend an additional 5 to 10 minutes. We have a quick deal analyzer, which by the way, Travis, coach, and everybody watching, I'm happy to share with you that tool for free. That 60-second yes, no, like zero strings attached. So I'll pull up while you guys are asking one of your questions. I'll pull up the URL. I can drop it in the chat or I can send it over to you guys, and then you guys can get that. There's a short video, 100% free short video that walks you through how to use it. But it's a simple 3-step process, and that helps you save a lot of time. It gives you confidence. It gives you clarity, and that's ultimately what people need to be able to make an offer on a storage facility.
Okay, good stuff. Yeah, we really appreciate that. Send that over to us,
Yeah,
and we'll definitely
absolutely.
get that out to everybody. Um, okay, we touched on it briefly, but what kind of financing is actually out there for beginners in the self-storage, that's trying to do a self-storage deal? I mean, of course, we have the owner finance, but just could you talk about that a little bit?
Yeah, so if we're talking about like conventional or traditional bank financing, one of the things I always tell people is whenever you're, so we look at, let me zoom out for a second. I live in Miami, Florida. I've never spent 1 minute looking for storage in Miami. Why? Because big metropolitan cities like Miami, Dallas, Los Angeles, markets like that, Phoenix, they are run and dominated by the REITs, the real estate investment trusts, like Public Storage, Extra Space. So I tend to focus my efforts on smaller markets. Think of markets that have a population between 10,000 and 80,000 people, where the medium household income is $50,000 or greater. There's growth, there's population, jobs are coming in, people are moving in. Those are the markets we focus on. Now, when I'm looking at a particular facility that I want to move forward on, I always advise for people to check with the small local community banks in that market. I'm talking about the community banks, the savings and loans, the credit unions that you've never heard of. We're not going to Chase. We're not going to Wells Fargo, Regions, Bank of America. That's not where we're going to get storage financing for these businesses. We're checking in with the small local community banks. So that's the first place. Now, keep in mind that self storage is a business with the benefits of real estate. So when a bank looks at a storage business, they're first going to look at the numbers. In commercial real estate, and storage is an asset class in commercial, the value is determined by the income the asset produces. It's not like in the residential where we look at comps or comparable sales. We're not looking at, hey, what did the storage facility last year sell for down the road? We're looking at what's the income that asset produces. That determines the value. And so a bank is going to look at the financials and the numbers of the actual business. And then, of course, they're going to look at you as a borrower. They're going to evaluate your situation. And I remember when I bought my first deal, guys, I went under contract for 1.6 million. I lined up SBA, Small Business Administration, was willing to give me a loan for 85% of the purchase price. And I needed about $350,000 to get into that deal, which I didn't have. In fact, if SBA just looked at me during that season of my life, I probably wouldn't have qualified for that loan. But because I have built relationships, and that's the backbone of this business and any business, it's meaningful relationships. In fact, I always say it's the most valuable capital you can raise is not money, it's relationships, relational capital. So that's why like I honor you guys that are spending your time here because you guys need to be connecting with each other and building relationships. Well, I had relationships and I went to somebody who had the 350 grand, but didn't have the time and energy to go find these deals and analyze them and line it up. And I gave him equity. He got some ownership in that deal in exchange for his capital that I needed to get into the deal. So SBA is another option for first time storage buyers. And then again, you have like residential, it's no different. You have private lenders, you have potential equity partners, like I just alluded to, somebody who has the money and you're willing to give up some ownership in the deal. I love seller financing, structuring deals creatively. Now, of course, that's not always possible. It depends on the seller, their situation. But those are the most common ways to get these deals funded. But I first like to start with small local community banks.
Okay. Yeah. I think that's great advice. And I buy commercial deals, not exactly storage, but uh, I always went to the local banks, the small
Yeah.
banks,
Yeah.
they got three branches, two branches.
Exactly right. It's first of all, it's easier. You don't have to jump through as much red tape.
Right.
SBA is great, but it's a process. You have to jump through a lot of hoops. They're going to require a lot of paperwork, a lot of vetting. When you're able to just pick up the phone, or if you're able to stop in and build a face-to-face relationship with these people, you can negotiate on rates a little better than you could with a bigger bank or SBA. And so, yeah, that's always going to be my go-to
Mhm.
when I'm looking at a deal.
Yeah, here in West Virginia, we're a small market and we deal with like I deal with a particular bank that, the president of the bank, we grew up playing ball against each
Oh,
other.
that's amazing.
The people on the board are local business people that we've transacted our families for, it's small town. And
Yeah.
and and so you get a real strong consideration when you show up and you want to buy something because they take into account that relationship capital. Well, we've seen David perform before and he's done this, so there's a good chance he's going to make this happen as well.
Yeah.
So and it doesn't it's numbers driven, but it ain't as numbers driven too. They'll take into account who you are, what they've seen you do in the community, and things like that. So yeah,
That's
you're
right.
right. The local small banks are just fantastic for these types of deals.
That's right. And coach, I think I saw, is it Sayed? I'm not sure if I'm pronouncing your name right. I saw his question in the chat,
Okay.
but like, so when I say a storage asset, like this is an example. This is a storage facility that one of my coaching clients bought late last year, so about 6 months ago. When I when I talk about a storage asset, this is one storage facility. Now, as you can see, it has multiple buildings. I don't know, 10, 11 buildings, whatever it is, but this is one storage business. So when I say the storage asset class, I'm talking specifically about storage facilities like this.
Okay.
Hopefully,
Means sorry. Hi Alex. Hi everyone. It means storage means every place in which you can store something. Am I right?
correct. Correct. So yeah, so this, as you can see here, you're going to see those little white doors on the sides. Those are units, and customers come in, they pay us monthly so that they can store their personal belongings in that unit.
Got it. Thank you very much.
Yes, sir.
Okay. Next question. How do you find, let's just say, maybe underperforming off-market storage deals? Do you target stuff like that? Do you send
Yeah.
out
Yeah.
postcards and information to these storage unit owners? And
Yeah, so here's the cool thing. Everything I did in the residential world, literally everything, I also do in storage. So I focus on off market. Off market has always been my bread and butter. So direct mail has been responsible for numerous deals. I don't send postcards, I send letters, hand written envelopes. Of course, now we work with companies that have like a machine that do the handwriting. So I'm not the one, I'm not going back to 2005, sitting in my parents' kitchen counter doing it myself. But yeah, I love 5x7 manila or black envelopes. And then we use a blue pen. If I'm using a black envelope, a silver Sharpie. And we always have the owner's name hand addressed. Here's a tip with direct mail that will really jack up your open rates is we'll put a live forever stamp and then we'll put 3 to 5 1 penny stamps right next to it. So think about the psychology when somebody looks at their mail. If you see an envelope that's hand addressed and then it's got multiple stamps, your curiosity is piqued. It's probably going to get opened. And that's the key with direct mail is you want it to get open. So direct mail is definitely one of my main marketing channels, cold calling. So we can literally jump on Google Maps right now, and within 2 minutes, I could be on the phone with the storage owner, right? So I like cold calling, especially when you're talking about these mom and pop facilities. You're either going to connect directly with the owner of that business or you're going to direct with the office manager or somebody who's going to be working there. So direct mail is an option. Relationships. So like we go to wholesalers, we go to brokers. I like going to Facebook Marketplace. And here's a tip for everybody. If you go to Facebook Marketplace, put in the search bar whatever city or state you're interested in storage in, and then use the search and put in storage. You're not going to find facilities for sale, but you are going to find owners who are advertising units for rent. We send them a direct message. We send them a DM and say, hey, I came across your facility. I understand you're looking to rent these units. I'm actually a buyer. Would you consider an offer for your facility? Or have you ever thought about selling? So we'll engage in a conversation via the DMs, via direct message, just by going to Facebook Marketplace. So a lot of different ways. Anything that you're doing from a marketing perspective in the residential world translates and applies over to self-storage as well. And then driving for dollars, by the way. If you live in a market, like I know, Coach, you said you're in West Virginia, there is so much power in literally stopping in, walking into that office and seeing if you can meet the owner face to face. It's a pretty friendly community. And so driving for dollars and stopping in is also a great way to build relationships and start getting some deal flow.
yeah, it's
I
good
love
stuff.
that. That's really good. I like that, old school. Let's just step out of the car and go in and see who's home.
And Travis, most people are not willing to do that because
Yeah,
it's not
powerful.
very scalable. It's not super efficient, but it
No.
does separate you from others.
Yeah. And you could definitely find your first one, two, or handful that way, right?
Yeah, man. Look, when I start working with people, especially if they live in a market where they're looking to own storage, it's one of the first things I tell them to do. I said, every single mom and pop storage owner within a 1 hour drive distance of where you lives needs to know who you are on a first name basis.
So let me ask you this, Alex. If I drive around, I build a list. Let's say I find five close by to me, and I drive by all of these, and some of them are distressed, maybe, and some of them aren't. Like, does that matter? Should I judge it off of if they have, like, because I'm thinking mom and pop, maybe the perfect person or avatar would be a mom and pop that has an old storage unit business. Maybe they don't even have a website or a social
Yeah.
media profile, right? Like, but does it have to be distressed?
It doesn't have to be distressed. So here's my perfect avatar. Okay, my magic wand scenario is a mom and pop storage owner that doesn't have any marketing in place. They probably don't have a website. They don't have any automations in place. They haven't raised their rates in quite a while. They're not really treating it like a business. So let me, if we have a moment, I'm happy to hop on and just take 2 minutes and show you how easy it is on Google Maps to identify mom and pop storage facilities. You guys mind if I do that?
Go right ahead.
Okay, so
Please.
check this out. All right, you should see Google on my screen right now. Can you see that? All
Yes.
right, so here's what we're gonna do. We're gonna go to maps.google.com. Okay, Travis or Coach, any one of you, give me any city, state in the country. I preferably a smaller market, but doesn't have to be. It's the same process.
Um, Akron, Ohio.
Akron, Ohio. Okay, Akron, Ohio. Here we go. All right, Akron, Ohio. Let's see if something LeBron James pops up here. But here's what we're gonna do. Akron, Ohio. So you see this nearby button? We're gonna click on nearby, and all I'm gonna do is type in self-storage or storage near me. Either one works fine. Now, these red dots that you see, this is the Google Map Pack. So, in other words, these are the storage businesses that have a Google My Business profile or a Google My Business listing. So, what I'm going to do is I'm going to scroll down the left-hand side and let's see if I can find the storage facility that usually I'm able to find one. So, take a look at this one. Lendo's, they don't have a website. No reviews, no website. How do I know that? Because it doesn't have this website button here. But that's not the only thing I'm looking at, Travis. I'm also looking at their reviews and the number of stars they have. Oftentimes, I can judge the performance of a storage facility based on their online presence. So let me see if I can find the facility that maybe doesn't have a great online presence. So look at this one right here. Now, they have a lot of reviews, but 3.7 stars. That tells me that there's probably some customer service issues or challenges there. Let's see if I can find one. Like, look at this one. 9 reviews. That's not a whole lot of reviews. So if I go to their website, now I'm betting, I have no idea this facility. If I go to contact us, if I see at Yahoo, at Gmail, at something like that, like a personal type email, and bingo, there it is, at gmail.com. That tells me that Chris most likely is the owner. And if I were to pick up the phone and call Chris or send this email, I'm likely going to get directly in contact with him. That's how easy it is to connect with a mom and pop storage owner. And so all we can do here, and we have virtual assistants that do this. Copley mini storage, 3.9 stars. That's not great. And so we can come here and there's the phone number. Like, look, they have a fax machine. That tells you they're pretty old school. And so these are the types of mom and pop storage facilities that we look to connect with. Now look at this one,
So
Storage King. I'm probably not calling Storage King. I bet you they have multiple locations. So here it is right here. Like, if it looks beautiful, like a place where you would want to probably store your stuff, that's probably not the storage facility that I'm calling to see if I can buy. I'm looking for the mom and pop operator that maybe just is not treating it like a business. Like something like this, probably. Only 4 stars. Like, these are the types of facilities I'm going after. Make sense?
Yes.
yeah, totally. That's
Yeah, it's good
awesome.
stuff.
Yeah. So
And
thanks for
it's
letting me do that.
free.
Just wanted to take a quick second just to kind of show you how anybody can go on Google Maps and start like pinpointing these mom and pop operators.
So you're not buying a list. You're not skip tracing.
You could. Now look, in commercial real estate data sets, like buying a list, The quality of the data oftentimes, not always, oftentimes is not as reliable and the quality is not as high as what we're all accustomed to in the single family world. So yes, there's companies like Data Axle where you can go, you can give them your criteria and you can buy a self-storage list. The quality could be hit or miss, so it's definitely an avenue. There's a few other providers out there, but I prefer to have virtual assistants building the list organically, doing, as an example, one of the methods I just showed you. Yeah, but
Yeah.
you could. Now, if I couldn't, if I really wanted to locate a storage owner and I wasn't able to track down their information, then of course you can skip trace just like you would anything else.
Yeah, that's good tips right there. I mean, I really like that. Looking for the Gmail or the Yahoo or the AOL.
Yeah,
You know,
it's just an indication that it's probably a mom and pop operator. It doesn't mean it's going to be a deal.
sure.
But if I gave you this statistic, this might like really open your eyes. More than 70% of our customers come from online, meaning like we get very few. In fact, we don't get any walk-ins because we don't have somebody at the office. We manage and run these facilities remotely. All my facilities are hundreds of miles away. I, I think I've been to one of them twice and I've owned it 3.5 years. So imagine I just told you that the majority of our customers come from online, and there are still mom and pop storage owners out there that don't have a website. That's like having a rental property and not having a door. It's just it's so a lot of these people are just that it's an indication that they're not treating it like a business. They're losing out on low-hanging fruit, things they can do to maximize the value and the income potential of the facility.
And
Yeah.
you can do you wholesale these as well,
I
Alex? Or
have.
yep.
I've wholesaled several of them. So I have something called a buy box blueprint. In fact, we built a custom GPT, like an AI tool, that within minutes you just follow the prompts and it'll build your buy box, which basically tells you what you're looking for. So the reason I share that is when something falls outside of my buy box blueprint, if it's still a deal, I'll put it under contract and I can wholesale it. So yeah, so this was a deal right here. This deal right here, actually not that one. Let's see here. Let's see if I can go back here for a second. It's coming up. So this deal right here was a wholesale. I got it through direct mail and put it under contract for 400,000. I had a buyer that paid me 550 for it. And so this one, the net on it was 150 grand. Now, when I was wholesaling single family, in fact, and it's kind of tough to see on the HUD here, but there's the HUD, there's the letter I sent, 400 grand, and got a wire. The net on this deal was 150. My average wholesale fee in Miami was like 17, 18 grand. So I had to do a lot of single family wholesale deals to give me what now is every storage wholesale 150 grand? No, but I would say they're usually between 50 and 100.
That's good.
Yeah.
How long of a due diligence period do we need on a deal like this?
It's usually 45 to 60 days is pretty common in terms of due diligence. So that is one downside to wholesaling storage is it's usually not happening within a week or 2 weeks or 30 days. It's usually taking about 2 months, give or take.
That's normal in small markets, like where we're at, 60, 90 days in some areas around here. So that's like a average deal. So that's cool, man.
Yeah.
I was driving out toward Mason County, which is a place where they're about to put a data center and it's a lot of like land and they have all this stuff going up. And I started to notice all these storage units that look like they weren't taken care of. So, you're talking and my brain is just like, the
I love
hamster
it.
wheel in my head. Now I'm going to get off the call and I'm going to be, Coach, this is what he's like, man, here we go. Travis with another idea.
Yeah.
But this is cool.
Yeah, you know what's interesting what you said about that? I hear you. Entrepreneurs and especially real estate investors, like we're notorious for being affected and by the shiny object syndrome. Like we want to chase every deal under the sun, and I think it's a mistake. What I didn't know when I transitioned, when I shut down my wholesaling business back in 2020, right before COVID, to focus on self-storage, I thought that I was going to have to acquire a whole new set of skills. I thought it was going to be a completely different business. What I know now is that 80 to 90% of the skills that I acquired as a single family investor translate over into storage. It's the marketing is very similar. The acquisitions process is very similar. Now, where are the nuances? how do we underwrite or analyze a deal? Obviously, that's going to be different. And then when it comes to when you buy the asset, managing, operating it remotely, that's a new set of skills. But in terms of the marketing, in terms of the conversations we have with storage owners, in terms of the acquisitions process, the paperwork, it's all very similar to single family. So if people lean in on their strengths, like if there's anybody watching and listening that's really good at finding, generating private money, relationships, finding deals, you can absolutely double down on those strengths and bring those opportunities to somebody like me in exchange for equity or ownership in the deal. So you don't have to wear all the hats when it comes to self-storage.
Yeah, it's good stuff, man. I appreciate you sharing it with us. I mean, that definitely gets the entrepreneurial juices going there,
Yeah,
so to
gets the
speak.
wheels turning a little. I see Travis over there already like,
Do you
think I'm
have a
gonna go.
minimum? Like, do you have a minimum amount of units that you're looking for?
I don't look for minimum units. I look for minimum net rentable square footage.
Okay.
So in storage, I'm not really looking at number of units. I'm looking at like what's the square footage of storage space it has. Generally speaking, I'm not really interested in anything below 10,000 net rentable square feet. My buy box is more in that 20,000 to 50,000 square foot range. But I think smaller deals, 10, 12, 15,000 square foot facilities are great starter facilities. When it comes to like really, really small facilities, 5, 6, 7,000 square feet, to me, the juice is not worth the squeeze. One of the things I quickly learned is that it takes just as much time, energy to underwrite, analyze, and put together a small deal as it does to put together a bigger one. In fact, I would argue that sometimes the bigger deals are easier to get funding and financing for. The pie is bigger, so you can get more people involved if you need to. And the juice is worth the squeeze.
Yeah, I find that to be the same way, you know. The bigger the deal is, the less the deal depends on you,
Yeah,
your
exactly.
credit and your finances. It's more the
Well,
asset and the
well
cash
said.
flow.
Well
Yeah.
said. Yeah.
Okay. Another question. So one of the big things about storage units, and I'm not in the storage business, but I got friends that have storage units and stuff, is what operational improvements are you looking at? Like when you buy
Hmm.
one and maybe it's a mom and pop and they're not doing. So what is the operational improvements that really get the
Yeah.
place going and really turn the thing around and really starts to open up the profit margins?
Yeah, fantastic question, coach, because that's really the heart of it. Like it's storage is an operator's business and we make our money with the value add opportunity. So first thing I look at is before I get to the condition of the facility, I look at the marketing. How's their online presence? Do they have a website? Are they doing any pay-per-click or Google advertising? Do they have online pictures? So generally speaking, we're doing an overhaul of their marketing. New website, fresh, professionally taken pictures. We look at now the physical asset itself. It's like, does it need painting? Does it have to be spruced up? Do we need to install an automated gate? Because the cool thing about storage is when someone doesn't pay, that gate code stops working. And the only way they're getting into that facility is if they tail a car or jump the fence. And then when they do, they have an overlock on their unit. So unless they take bolt cutters or something, they're not accessing their stuff. And so I'm looking at the condition of the asset. I want a brand new sign. I want really good lighting. I want security cameras. I want an automated gate. I want to make sure that the facility doesn't look run down. It just looks welcoming, warm, and inviting, and instills confidence in the customer to want to store their stuff. Because what do storage customers care about? They want a safe, clean place to store their belongings. So security systems, lighting, and the place just looks good. It doesn't look run down. That's what I'm looking at. And then the big value add driver, I think, is in twofold. We're looking at the rental rates. So let me give you a single family example. Imagine if the five of us or six of us that are on this Zoom right now, and maybe anybody else who's watching, let's say we got together and we found a rental property that we thought was a really good deal. And let's say that one of the reasons we like the deal is because that owner was renting a 4-bedroom, 2-bath house for $800. And we looked at the market, and that's actually like a $3,000 a month rental. Now, that's a pretty crazy example. There's a big gap there, but essentially that's what we're looking at in storage. We're looking at storage facilities that the rates are here, but based on the average of the market rates, they really should be here. Somebody's charging 50 bucks a month for a 10 by 10, but when you look at the competitors in a 5 mile radius, that 10 by 10 should be 80 or $90 a month. Well, that represents huge value that I could instantly go in, and all I got to do is raise the rates, just bump the rates up. The great thing about storage is that if the competition is full, and that's a key nuance that you have to know. When we look at storage, we want to be in a market that has more demand for storage than supply. If you're renting my unit and you're at 50 bucks and I say, hey, coach, I'm going to raise you to 70 bucks. You're probably not going to love that, but you're going to look at the competition and say, well, why would I move my stuff out of Alex's place? Because I'm going to pay 90 bucks somewhere else. You're not. You're not. So that's one of the things we look at is the delta, the gap between the current rates and the average of the market rates. We also look at one of the reasons I love storage is the fee income. So think of storage as having mini profit centers. So we charge late fees, auction fees, gate fees, admin fees, tenant protection. So those are all mini profit centers, and that revenue goes to the bottom line and adds value to the facility. So those are some of the levers that we look to pull on from an operations perspective. So yeah, I mean, there's other things like obviously if there's demand for storage in the market, we look at, okay, well, does this facility have the ability to expand? Can I add additional units to really maximize the income potential here? But generally speaking, we're looking at the marketing. We're implementing automations and technology. We're bumping the rates. We're introducing fee income. And that is what really adds value to these facilities.
Yeah. Great answer, man. Yeah, that's good stuff. I've got one more question. I'll let Travis I'm sure he's got something else for you there. So what does a realistic first deal, look like in terms of timeline, in terms of risk or expected returns? I mean, what's that look like for a newbie just wanting to get their first deal, first storage facility?
I might disappoint you with my answer because it's not a black and white answer. There's kind of a running joke in the self-storage space that the answer is usually it depends. Yeah. What I mean by that is that you said, what's the timeline? Okay, we'll start there.
Yeah.
I would say the timeline, well, first of all, a lot of the work and energy that we spend in self-storage is in identifying and finding the right opportunity. But let's say we went out and we found the right opportunity, we put it under contract. Generally speaking, we're doing a 45 to 60 day due diligence period. And then depending on the purchase price and how we've structured the deal, let's say we're working with a bank, we could probably get the deal financed, closed, and funded in 60 days, 90 days maximum. Okay? It could be less, could be 45 days, but let's just call it somewhere between 60 and 90 days from the moment we go under contract, we perform due diligence, and then we get to the closing table. 2 to 3 months, let's say. I would probably say that's a safe bet on average. Okay. Now, in terms of the expected returns, it would be impossible and almost irresponsible for me to give you a black and white answer because there's a lot of variables. What's the occupancy at? How did you fund it? What's the market? There was a lot of things that play into what's the expected return. But whenever I look at a deal, let me answer it this way. I look at the deal and I first ask myself, okay, is this a cash flow play? Is it an upside play? Meaning, like I've bought facilities with the sole purpose to increase the occupancy, increase the revenue, add value, and then turn around and sell it in 18 to 24 months. My first and third facility in Mississippi, I bought that facility for 1.592. So a little bit less than I was under contract for. We negotiated a credit at the end. I sold that facility for just under 2.5. 3 years later. So about a $900,000 bump in a 3-year and a 36-month period. Now I did generate cash flow during that time. I did something called cost segregation, which wiped out a fair amount of my taxable income. So there's a lot of benefits that come from it, but that was my purpose there because I didn't really want to be in that market long term, was to stabilize the facility and sell it and exit for a profit. So I'll look at, is it a cash flow play? Is it an upside play? Sometimes it's a hybrid play. And then that will determine, but I'm not getting involved in deal to generate 3, 4, 500 bucks a month in cash flow. Like I'm usually looking minimum $1,000 and up. Again, the juice has to be worth the squeeze from a cash flow play. But it'd be really tough to just give you a black and white answer. I mean, I have there's some facilities that like we have one facility now that generates just under 4,500 bucks a month in cash flow, like net cash flow after we pay expenses, after we pay the debt service. That was a seller finance deal. Generates a little bit over 4 grand a month in cash flow. And then there's others that could generate significantly more. It really depends.
Yeah, yeah. I mean, I guess yeah, everything depends on the deal, I guess, and how the deal's structured and what type of financing you get, and
Yep.
just like any
I
other commercial play.
Yeah, generally speaking, coach, I like to look at a minimum 12% cash on cash return in year one, right? But 12 to 20% cash on cash is a pretty fair range of what I'm looking for in terms of a metric.
Okay. Yeah, yeah, that sounds good. Yeah, man, that's great information, and I really like the the 3 1 cent stamps on the envelope. I've never heard that before. I've been around a
Yeah.
long time, so that was a good one, you know.
Cool, cool. And let me spice it up a little bit. I love the Marilyn Monroe stamps when you can get like the old school Marilyn Monroe, or you get like, think of marketing as grabbing attention. So if you can find a stamp that is going to grab someone's attention, you got a better chance of them opening the mail. I've tested Star Wars like stamps, right? If I'm sending like to a really old, generation or old classic cars, like test different things, but think of marketing as you got to grab their attention.
That's right. I know a guy I'm about to tell a secret, but he sends out stamps with Betty White on them,
There you
and
go.
he gets a crazy response from the Betty White
I
stamps.
I believe it. I've never sent out Betty White. If it's okay with you, Travis, I kind of want to test that one now. But yeah,
Yeah.
I can
hmm
see it. I can see it.
Yeah. No, I know we got to go here in a second, but we appreciate you, man. This is a lot. So one of the things that clicked with me is, over the years dealing with houses and buying houses from sellers who are, are relocating, they're moving. I couldn't tell you how many times I've had to go out and find a storage unit for them. Like that's a part of what I did. Like I helped them find a storage unit. So it's
Yeah.
funny that like I did that and I wasn't thinking I need to try to like buy one of these now that I found one. So that's
Yeah,
that's
man.
that's because
Yeah.
they all needed somewhere and everything you said makes sense. Like I remember they all, like, oh well here's a storage unit. This is how much it costs. Where is it at, Travis? Oh, I don't want to be over there. I don't like all these little things matter. Right.
Yeah.
So, like, I think that that's cool. That kind of helps out a lot. This opened my mind up to a lot. I hope it helped everybody else who listens. Because you gave a lot of good game, man. This is a
Thank
lot
you,
of good
man. Thank
stuff.
you. That
I
was
knew you
that.
would, though.
That was the plan, man. I'm an open book, so anything you guys need, I host a podcast called Storage Wins. Twice a week, I'm just sharing a lot of information about self-storage. It's called the Storage Wins Podcast, and then on my YouTube channel. In fact, if you guys go, I created a course that the intention was to sell it. And after months and quite a bit of money of putting it together, I said, hey, this is going to be a distraction from what I'm doing in my storage business and with our coaching community that I'm giving away the course. Like no strings attached, like leave your like you don't have to pay anything. Cashflowmaps.com. Cashflowmaps.com, and it's a full kind of A to Z training with all the tools and resources. So my gift to you guys, if that's something you're interested in, like literally no strings attached to it.
It's great. Send us all that as well, and
Cool.
we'll put it in the video description
Happy to, man.
and all that, man. We really appreciate you.
Yeah,
Wait,
man.
before
Yeah.
we go, I do want to say, like one of the biggest things is what you mentioned earlier, like shiny object syndrome, like okay, one week we have somebody on here and they're talking mobile home, put mobile homes on land. Now Alex is on here telling us to do storage units, but when we
Yeah.
find something that clicks and we need to lean into it. Like how important is it to say, you know what, I want to wholesale, but I do want to do storage units and I'm going to focus on just wholesaling storage units right now. Like how important is having that one thing?
I think it's very important. Like one of the books behind me, I don't know if it's somewhere here is The One Thing by Gary Keller, right? And The Pumpkin Plan by Mike Michalowicz, very similar idea. If you're early on in your journey, I do think it's important to go an inch wide and a mile deep. Pick a lane and get good at that. The great thing about wholesaling is that wholesaling is really a marketing business, in my opinion. If you can wholesale houses, you can wholesale storage. It's not all that much different. What I would not recommend you do is try to wholesale houses and storage and try to do, create a financing lease options on land, and you're doing this and that, and you're involved in all these different asset classes and all these different strategies. That is the definition of shiny object. It's an easy way to like just scratch the surface, but not go deep enough to have an impact. And so I do think it's important to focus on one thing. I think it's a nuanced answer. It really depends on where you're at in your journey. For me, I spent a lot of time in single family, and that business just no longer aligned with my goals and vision. So I knew it was time for me. I wanted to do something bigger. When I was in wholesaling, Travis, it was all about volume. In storage, now I look for one or two good deals a year. Like that's it.
That's awesome, man. Well, we appreciate you. I'm definitely grateful to have you, David. Is so before we go, Coach, you would just want to lead us out of here?
Yeah. Also, I see in the background there behind you, Alex, you've got the entire Kiyosaki
Oh
set
yeah,
of books, it looks like,
exactly.
because I recognize the covers. I can't read them, but
They're
I've
all
got them
there.
too. So
Most of
I've
them
read them
anyway.
all.
Yeah, that's right.
Okay, man. Well, Alex, thanks for being with us. It's been great. I love talking commercial and storage, and this is right up my alley. So, everyone out there, we want to remind you as well, we have our school group. So if you're not a member, we have a free school group. Go over to Small Market REI and join our school group. Um, we also, Travis and I are opening up our mentorship. So if you want, instead of just getting information, if you want true guidance, we've kind of changed the game. We're doing it. We'll take you through until you buy your first deal. We'll be with you all the way. And lastly, I want to remind you that um, we well, I don't know where I was going with that. So anyway, at the end, Alex, thanks for joining us. On behalf of Alex, Travis, I'm Coach, and remember,